Welcome back, Alpha Hunters! So the market has closed for July the 1st, which means June is also closed. June closed Thursday. So we will look into what the monthly picture looks like, as well as normally we look at the weekly picture as well. And then we will take a look at some semiconductors, because I did have someone reach out to me, wanted me to look at semiconductors, giving me my thoughts on semiconductors, and some plays I think we can start doing right now to generate some cash flow, even if you're a little shaky on the market, as I am currently, okay? But let's start by looking at what went on this week, okay? So we'll zoom in here, see what this 5-day picture kind of looks like. And what we can see is we put in a very nice evening star reversal pattern from last Friday through Tuesday, and is typically a very bearish signal. But it has happened lower in this downtrend that we've been in since the end of March. So I'm not really digging this kind of pattern right now, and wouldn't be shocked if we did get above it here over the next week, possibly two, okay? And big reason why is we saw some strong buying come in later in the week on Thursday and Friday. So we could see a continuation of that going into next week. So let's go in intraday. We'll go into a 15-minute candle and see what really kind of just went on this week. Now Monday, we opened a little higher and just traded down, and then pretty much hung out the rest of the day. We didn't really do much on Monday. It was a pretty quiet day. Tuesday was the day really of most action during the week. Now Tuesday there was some Fed talk, as well as the US Treasury Secretary, who was the former Fed chairman. So Jay Powell and Janet Yellen were out there talking on Tuesday, basically about the state of the economy, what they kind of expect, and what their plan is going forward to kind of keep the country out of a recession and keep inflation down. So we saw a strong pop on Tuesday, and then selling just came in the whole day. Okay, just after that, just selling down the rest of the day. And if we look at an hourly, all right, this is the hourly picture. We just sold down the whole day on an hourly time frame. So it was just nonstop the whole day, all the way into close. And this is the close right here. And then we got into Wednesday, sold down immediately, bought back up, and then just kind of hung out, just kind of went sideways the rest of the day. Wednesday, we had a gap down. And that was probably a continuation from the selling that we had on Tuesday, as we got a resting day on Wednesday. And then Thursday, we just had this gap down, and then kind of got bought up midday, and then we just hung out for the rest of the day. Going into Friday, we didn't really do much that we didn't see on Thursday already. We just kind of hung out. We saw some strong buying early, then we saw some selling, then we hung out for most of the middle part of the day, and then the last 2.5, 3 hours, we saw very strong buying come in to close out the week. So if we go back to the daily picture, one of the things that you do notice here on the daily picture was how strong of a volume Thursday was. Now, we didn't really do anything super crazy, but you have to remember that was quarter end. There's a lot of people out there, a lot of hedge funds out there repositioning before they send out reports to their investors. So that was probably what was driving a lot of the volume that day. So let's go ahead and look at the weekly, and then we'll look at the monthly. So the weekly, the way it kind of closed out is we had a long bar bullish candle from last week, and then we had a little bit of a retest. Now I thought we'd get a little bit of a retest, but I thought we'd go higher into the second half of this week, but we didn't, just from Tuesday was just a lot of selling that kind of came down. So it kind of drove most of the price action for the week, as it just was too much selling that kind of came in. So we definitely have a little bit of a lower wick. I could see us definitely getting above that lower wick, or just hanging out and just slowly grinding up here over the next couple weeks. And as you guys know, anywhere in this red box area, in this red zone, I'm just non-committal. I don't know what direction we'll go, but it doesn't mean we can't make money, and we'll get to that a little later, okay? So let's look at the monthly picture, since we did close out June. The monthly picture, it looks like we kind of came in close to the 50 exponential moving average on a monthly time frame. So that's kind of interesting. I would expect some bullishness to come in, at least for the beginning part of July, before we potentially roll over. And that's mostly going because we did close below a bullish candle that we had back in May. So June did close below that candle barely. We haven't really gotten to any major support levels. We almost got down to this one back from September of 2020. But I don't think that's going to be the one that holds, or where the bottom will be. I think we will see all the way down to 340, which was the pre-COVID high. That is the one I am really looking for. Anywhere between like that 340 to 320 type area, that's where I will be looking to get my longs. Okay, so let's look at the Qs real quick. Not going to be much different of a story, but I would expect the Qs, to probably just keep coming down into this 240 type area, this pre-COVID high that they did have. And I do think the Qs will definitely get there easily. It'll probably maybe potentially even get a little bit lower than that, because tech is the biggest problem in the marketplace, okay? Tech is by far just getting crushed. Semiconductors, which we're going to look at here in just a little bit, are just the problem child, right? So let's look at a weekly for the Qs, and yeah, nothing too offbeat from the SPY. Definitely hasn't been selling down as much over the past few weeks as the SPY has. So if you look at the SPY real quick, it's this drop that we had 2, 3, 4 weeks ago definitely was a little bit more on the SPY than it was on the Qs. So we could definitely start to see some pops here in tech, as they've just been massively beaten up. So let's look and turn our page to semiconductors, okay? So the big earnings announcement that we had this week was from MU. So if we look at MU stock, Micron Technologies, they had a very, very bad week. They got below this longer term support level, which if we go back out to a monthly, was this support that hit back in the pre-COVID high, as well as back in the 2018 timeframe, okay? And the other thing you kind of notice on the MU monthly timeframe is you see this massive double top. So the double top I'm referring to is right here, down, up, down. We now broke through that neckline, right? Neckline right there. So we came down to a previous support area. I would expect Micron Technologies, as most of the semiconductors have been dramatically beaten up. I'm gonna go back to that word. Dramatically just been hammered so much over the past several months. And we'll look at a few other semiconductors, but I would definitely be expecting a retest up into this neckline area and probably a rollover, okay? I would definitely play it that way. I think semiconductors do have more downside to go, and I am a huge semiconductor bullish fan. I've been bullish on them since probably like the 2012, 2013, both how much they have risen over the past several years. They just need the time to rest, as they've seen a lot of gains driven primarily by crypto. And if you pay attention to crypto space, crypto right now, if we go look at Bitcoin, BTC, Bitcoin on a monthly, I mean, it's just broken down. It broke this trend line, this exponential trend line it had going to the bullish side, and it has really gained steam, especially over the past like 2 months, to the bearish side. So now that this has really broken, crypto is going to take a while to kind of figure out what it's going to do and what it's going to be. But I don't see the end in the crypto sell-off, so I would expect it to kind of continue to go down. So semiconductors need to get back to what has led them to be such a stable in technology, and that's going to be providing chips to a lot of different technologies. So if we look at a weekly picture here on Micron, yeah, this is going to be probably what I would expect to play out. Some bounce up into the 65 to 69 point area. Somewhere in there would probably be the time to get in bearish for potential rollover. So let's look at the daily picture and the earnings that came out from Micron Technologies. So for Micron Technologies, you see the green flag down here, so that means they beat on the earnings side. They're actually pretty flat on revenue, it looks like, but they did beat on the bottom line, but they guided down pretty heavily. And that's been the story from a lot of these technology companies going through their earnings announcements, but they're still very healthy companies, still making a lot of money, and are in no way in danger of going bankrupt. People still need semiconductors to make a technology piece, so look for the buying opportunities later on, as they'll probably continue just to go lower. Let's look at Nvidia, okay? So Nvidia looking real bad, especially over the past several days, just a massive breakdown. So if we do go out to a wider time frame, now Nvidia did break down a pretty solid support level that it had held for the past several weeks, but broke it down, and it's still in a pretty good support area. So I wouldn't really say right now is a good time to be shorting or getting bearish on Nvidia. I would actually say right now it's a pretty good time to be bullish on Nvidia. With this breakdown, a lot of people are going to freak out, but that's a good time to probably just snag some bullish positions. Now, if we look at how much Nvidia is down from its all-time high, it is down roughly 58%. Okay, so let me go back to Micron, because I meant to do that on Micron. Micron is down roughly 48% from its all-time high. So Nvidia being down 58%, that's, I mean, these are names that are just getting hammered. They're really weighing on the market. So that's where we're going to probably continue to see the market weakness come from, is a lot of the semiconductor names, okay? So if we go to AMD down roughly 55% from their all-time high. When the times are good, they're good, but when the times are bad, they're also bad. I would be very cautious on trying to get in on any of these names bullish here. I do think probably getting some short-term trades for the bullish direction, but I would definitely be looking for more downside in a lot of these names. And the area for AMD that I'm very interested in probably getting in long would be anywhere between these 45 to about 35, anywhere in that zone. And the reason why I say that area, if I go back out to a monthly time frame, this lower line is pretty much its previous all-time high type area. So I could definitely see it getting down to there. And if it did get down below that, I don't think it would get much more below the 35 area, as that was its high back in 2018. It didn't really put in a very solid support and resistance type area in the pre-COVID high of 2020, as it was just in a massive bull run right there. But anywhere between that 45 to 35 type area, that would be the zone I would be looking to buy into AMD. Okay, so if I go back to Nvidia, I definitely do dig this line right here. This line at about 74, and I know a lot of people are like, no way, 74. Yeah, I think there's going to be a lot of pain in these semiconductor names, and it's probably not going to be one where it stays down there for very long. It'll probably try to consolidate, try to form a base before getting down there, and it'll just flush down there for like a week, maybe two, and then just gets bought back up. I do like this support level because that was the pre-COVID high pretty much, and then that was also the high I had back in 2018. So I do like that range, right around that. Anything below 80 for Nvidia, I think that's going to be a slam dunk buy for the long run. Now, Micron Technologies. Where do I think this thing can get to? Man, I'm not really sure. If it can get back to this level that it had back in 2014, which was around the 36 area, I don't think it'll get that low. I don't think Micron will get that low. I think probably the 45 point area probably be good in this area where it chopped around for a while. Makes a lot of sense to me. This is not really one stock, even though they're a semiconductor, it's not one that they like to high fly to the upside like Nvidia and AMD do. So this is one that it probably gets back down into this zone and probably just hangs out for a while before it gets going back bullish. Anything at around the 45 point area though, I would definitely be buying it up. But for now, I would look for the bullish trade on the semiconductors, as I do think here over the daily picture, they have been massively sold off. And you could definitely see it where they've had some breakdowns here recently that it's just probably just a little too overextended for my taste to be bearish here. And so I could definitely see people that have been bearish on them to where that they start to close their positions, probably start to look, maybe not bullish, but they do close their positions, which will make the stock go bullish. So that's kind of what I'm thinking. I think we could see a short-term pop on it, but I do think there's more room to the downside for them, especially with that Micron double top. So just watch out for that. But what sectors are working good? Well, a few weeks back, I mean, we were talking about them. Consumer staples, Coke, we had this massive sell down on Coke and a lot of these consumer staples names. I said this is going to get bought up. Like, this was an absolutely crazy sell down on consumer staples. And Coke was down 7% roughly on that day, on that one long red bar day. So it made sense that it went a little bit lower just because that's going to freak a lot of people out, and they're going to try and sell into any kind of retest into that. But it's just getting bought up. It got bought up as it sold down from a few days later and rolled back over, and it's just been getting bought up since. So go into some of these names that are really working. Coke, Pepsi also the same thing. Sell down, got bought up, sold down a little bit lower, and has been bought up ever since over the past 2-3 weeks. So definitely be looking for these kinds of names, as tech's probably just going to continue to weigh on the market for a while. And I'm going to get into a little bit on why that is here in just a second, okay? Look at McDonald's. McDonald's. Look at this, lower high, lower high, lower high. So McDonald's is looking really good. McD's, I'm loving it, man. Bring me the money. So there are plenty of areas out there where stocks are doing really good. The area that's doing really bad is the area that weighs the most on the market, which is tech. If you look at Apple, Microsoft, Nvidia, Google, Amazon, Tesla even. I mean, these are, look how big these squares are compared to the rest of the S&P 500. They weigh a lot. Anytime tech has a good day or a bad day, it's going to drive probably the market in general. So I would definitely be looking for more downside in the market in general, because tech will probably continue to get hammered. Now this is the heat map from Friday, so you can see just how bad semiconductors kind of got hammered off of that Micron earnings. Nvidia, Intel, Qualcomm, and then, you know, HPE, Seagate, Western Digital. So yeah, any kind of semiconductor type company, they got hammered on Friday. So I would definitely continue to stay away from them. I would look for a bullish play here over the short term, but after that, man, I would be definitely being a little bit more cautious on them if they do start to pop here with the market. But there are definitely plenty of opportunities out there. You just definitely got to look for them. And I would imagine if you do look at most stocks do not look nearly as bad as the market. The reason why the market looks so bad is because the big dogs of tech. So just stay away from tech. Stay away from what you've known for most of the bullish run that we've had over the past 10 to 20 years. And I would just be concentrated into like consumer staples, those companies that reliably make money. You know, food companies don't go anywhere. People are still going to eat. People are still going to drink. That's why you got to love them. They're not sexy, but man, they are safe. If we do get this pop on the market, if you see this AAPL, if this starts to have a really good run here over the next couple of weeks, yeah, I will be looking for a piece of this pie here on AAPL. Now let's talk a little bit about what you can be doing. So you can take a company like McDonald's, Coke, Pepsi, or you can find another one that doesn't look nearly as bad as the market, which the SPY in this case, or nearly as bad as the Qs, and, you know, maybe go do some put sales. Now that's something that I kind of started thinking about this past week. You know what? I do like this green zone of buying down here. I do like being bearish up here, but we're just in this red zone where I got no takes. Like we could just be choppy, we could go sideways, we can go bullish, we can go bearish. There's just not much going on here because from the bullish trend that we went through a couple of years ago, last year, the year before, there was not much structure the market put in this zone. So this is why it's very hard to say like, hey, this is a support level, this is a resistance level, this is where it's going to bottom. There's not much of that. So I definitely didn't want to be too much directional in here. But one thing we can start to do is do put sales. And the area I've been looking at is down here in this green zone. Just go out a month or two and do a put sale. And if we have a bounce on the market and I'm going to look to play it bearish, then I'll close my put sale and I'll look to use that capital to go bearish. Now do remember that if you're going to do a put sale, whatever the price is you see for the option, multiply that by 100, and that's how much cash you can bring in per contract. And if you want to know how much capital you need to do a put sale, then just look for whatever strike you're looking for on whichever stock, find the strike, multiply the strike by 100, and that is how much capital you need, okay? So take for instance, if I was going to do a put sale at the 346 strike, I would multiply that 346 strike by 100, and it'd be $34,600 I need for capital so that I can use that for collateral. Because I am basically saying if I do a put sale, I'm willing to buy the stock at whatever strike price you are selling. Now, I wouldn't do it super close as the market could still be choppy, or whatever stock you're looking on could still be choppy. I'd go a little bit further below it, and I'm not looking to go super long term on selling these type of options. I'm just trying to bring in some shorter term cash flow, maybe over the next month or two. So that's kind of what I'm looking to do. Anywhere down in this green zone, I'm going to be looking to continue to sell some puts and just bring in some short-term cash flow. And that's pretty much it. Now, the big reason why I do like doing this type of strategy right now is because I can collect some cash flow, and I have no idea if the market's going to go sideways and just chop around in here, or if the market's going to go bullish, you know, for a nice bear market rally. I'm not really sure. And since I don't really know, I'm willing to say, hey, you know what? If the market got down to the zone, I'm willing to buy it anyways. Okay, so I'll just bring in some cash flow, and that's where I was going to look to buy the market anyways. So I'm cool with doing that kind of strategy. Now, I did see a report that patriotism is at an all-time low. So enjoy this. So hopefully that got your patriotism back up a little bit as we are going to July 4th weekend, okay? And remember, markets are closed on Monday. So enjoy your time, be safe. Alrighty, take care, Alpha Hunters.